The views expressed by the speakers of CamaPlan podcasts are those of the speakers only and may not reflect those of Cama, its members, or employees. Cama does not guarantee the accuracy of information provided by these speakers. Professional advisors should be consulted before implementing any options presented. Cama absolutely does not endorse or recommend any individual or organization, including the speakers. Cama, its members, and employees do not accept liability for losses and/or damages arising from errors or omissions within, reliance upon, or any use of the information provided by the speakers. Individuals are strongly encouraged by Cama to conduct their own due diligence before making any investment choices. Cama does not act as, nor offer the services of, an investment advisor, CPA, realtor, or attorney. If tax, legal, accounting, investment, or other similar expert assistance is required, the services of a competent professional should be sought. Hello and welcome back to The Road to Financial Freedom, a podcast that allows experts to share their stories and secrets to unlocking their financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator in Ambler, Pennsylvania that is focused on educating investors with different ways to grow their retirement savings faster through alternative investments. And of course, we are continuing to record this podcast remotely. I'm Jess Jones, CamaPlan team member and your podcast host. We're thrilled to introduce this week's guest. Since 1994, he has helped people pursue their financial goals. He began with American Express Financial Advisors Incorporated and quickly rose from the Master Advisor to Gold Financial Advisor to Platinum Financial Advisor by 1997. After obtaining his Certified Financial Planner certification in 1997, he became the lead part of a group of the top 1% of American Express advisors called the President's Council. He is also a licensed insurance agent and became a member of the insurance production-based group, the $1 Million Roundtable, in 2001. His business and reputation grew through countless client referrals, and these referrals set him apart from the other 13,000 American Express advisors, launching him to the number 2 producing advisor in the country in 2003. By 2005, he was able to move from American Express to start his own full-service wealth planning firm, A.G. Morgan Financial Advisors, where he is chairman and CEO. His vast knowledge and experience allow him to provide his clients with the help they need to address their financial goals at all stages of their lives. So please join me in welcoming Vincent J. Camarda to our podcast. Vinny, thank you so much for being here today.
Oh, thank you for having me.
I'm so excited to learn some more about you and, your background and what you've done to get to this point. So let's jump right in. Tell us some more about your background. So, where were you born, grew up? Where did you go to school? What did you study? All of those things that formed your early life.
Sure. I was born in Baldwin, New York, which is on Long Island, and I grew up there as well. I went to Hofstra University, where I received a BBA in accounting back in 1985. And once I started at American Express, almost immediately thereafter, I started to study for my Certified Financial Planning, certificate, which I think is very, important to have as much education as possible so that you can provide the best advice for your clients.
Yeah, I really love that response, especially because over the course of this podcast, we've heard from a lot of our guests that education really has such a value at all stages of success. So, whether you're starting out or whether you are well established and you are continuing to grow your understanding of your area of expertise, it is a hugely valuable thing. So thank you for sharing that. So then how did you first get involved in financial advisory?
Well, so I wanted to help. I like helping people, and I thought that being a financial advisor would give me the opportunity to be able to help people plan for their future. I find financial planning like a jigsaw puzzle, and I like the challenge of being able to put all the pieces together to help people to reach their goals.
That is an excellent analogy, the jigsaw puzzle, because not everybody's going to be the same. People are going to have different financial goals and different pieces are going to go into building that puzzle. So looking at the way you look at things as a problem solver, I'm sure that as a financial advisor, you've had to develop, a different strategy for every different person that you encounter and every different individual. So is there any particular person or thing or, any aha moment that you had, whether it was at school at Hofstra studying accounting or anything before that inspired you to say, hey, I want to get involved in this. I want to become a certified financial planner? Is there any particular moment to pinpoint or person to pinpoint for you?
Well, when I came to American Express, they felt very, very strongly that we should all have as many degrees as possible. And the highest degree in our field is CFP, Certified Financial Planner. So I thought, just go for that. So that's what I did.
Right, absolutely. So then as you moved up the ranks within that company, from reading in your biography and rereading it, you quickly moved up in these ranks in American Express Advisors. So at each stage of that, if you could share, you don't mind sharing, what are some of the different values that you picked up or different additions to your skill set that you picked up as you propelled from one step to the next within American Express, and then, as you moved on in your career as well?
I think what differentiated me from other advisors is I was always trying to do more. I was always trying to add a little more value than was expected. Mm-hmm. And I think clients recognized that I was always trying to add more value, help a little bit more than the next advisor had, for them before. And that extra effort, I think they recognized. And so my practice grew just through referrals. And I think that's because we were doing everything we could to help our clients in every area of their financial lives. And they seemed to recognize that and wanted to share that with their friends and family.
Yeah, it absolutely sounds like that. Just, based on reading your bio and how you really focused on serving your clients, and then rose to become number 2 producing advisor in the country of all the American Express advisors. I think that there is probably so much importance that a client places on finding an advisor just as well as an advisor places on finding a client, and someone who can solve their problems, be a problem solver from that objective standpoint, but also provide the individuality of each person and how their financial goals are going to differ. And I think someone who pays attention to the personal as well as the analytical is probably something that is such a major asset as someone who's a financial advisor and really provides clients with that service. So thank you for sharing that. I mean, I think that that's really insightful.
Sure. And one other thing is that as you pointed out, I'm the one that saw and still sees all of my clients on a yearly basis. So it's very personal to me, and I think it's personal for them as well.
Yeah, I completely agree with that. And I mean, I'm someone who's brand new to this industry as well. And I know that I need to start looking at my financial goals and analyzing where I fall on that spectrum and what I need exactly from my financial goals and my future career as well. So I know for me personally, I'd love to work with someone who understands me as an individual and understands my goals, my fears, my desires as well. So I think that that's really important and very valuable for, and it puts a good perspective on, what clients should be looking for as well as advisors. Of course. So, then you've gone from working at American Express for so long and then turned it into starting your own financial service and wealth planning firm, A.G. Morgan Financial Advisors. So, what was the inspiration behind moving from a company like American Express to establishing your own independent investment management firm? What was it? Obviously, it's a life-changing decision. So, what inspired that?
Well, back when I made the change, it was all about having more flexibility. American Express didn't allow us to have discretion on clients' accounts and the ability to do block and blast trading, meaning that today we can press one button and make a change across many, many different accounts at one time. At Amex, we had to contact each client. We had to get their approval. We had to then execute each trade one at a time. So it was a very laborious task, and the clients weren't even getting the same prices for their trades.
Wow, yeah.
Because it would take days and days to get to get to speak to everyone, get confirmation from them that they wanted to make the transaction. So by going independent, it allowed us to just be able to do business in a much simpler way. I don't know if American Express allows for those things today, but at that time they didn't.
Right. So in addition to, you said you still meet with all of your clients personally, and having that really personal understanding of who your clients are and what they need, there is an emphasis on simplicity that you bring up that I think is really interesting, because so much of this stuff kind of seems like it's very cloak and dagger to me. It's kind of behind closed doors, but being able to really have an active role in clients' investments and advisory really, I think, takes some of the complexity out of it and makes it simpler. So thanks for explaining that.
Mm-hmm. Also, we then were not limited by the products that we were allowed to offer to our clients.
Right.
Every broker-dealer has limitations on what investments an advisor can use for their clients. When we went independent, then all products were available to us without any restrictions or limitations. So that, again, was an advantage for our clients.
Definitely. I mean, it sounds like it simplifies things, and taking some of the complexity and mystery out of things was such an interesting story, because it expands what people can do, but it also simplifies it. I think that, again, I think it's an incredible story because it's an admirable choice you made for not only yourself, but I think you made it on behalf of your client. So thanks for sharing. I think it's really an incredible story.
Sure.
So let's talk some more about AG Morgan. What does AG Morgan do? And this is actually a 3-part question. So what does AG Morgan do? Who is a typical client of AG Morgan? And how are they benefiting from financial planning and advisory, especially the kind that, you lay out here in your approach?
So AG Morgan is an old-fashioned traditional financial planning firm, meaning the first step for us when a client comes to us is we literally do a financial plan, a written plan which outlines all of the goals and the game plan that we set up to reach all of our clients' goals. So the first step is doing the plan, and then once the plan is done, then we implement the plan and make the investments, get the wills done, refinance the house, whatever it might be. And
right. Mm-hmm.
From there, then on a quarterly basis, we get together with our clients to monitor the plan to make sure that we're on track to reaching their goals. So there's never a surprise at the end if we didn't reach our goal, because we were monitoring it throughout each year, every year, until the goal is complete. So it all starts with the plan with us. Our typical client is just a regular middle-class client. We live in a middle-class community. And our clients, we have high net worth clients, but the bulk of our clients are just middle class mom and pop clients that need help with all the same things that I need help with: college, retirement, paying off mortgages, things like that.
Really interesting. And I also think that it's very interesting that, you guys check in every year. I like that idea as someone who I like to check in a lot with myself. I think it's important because goals change, structure changes, life changes. I think also the clientele that you lay out is very interesting. A typical middle-class American, owners of mom and pop stores. I'm sure they've got other things on their mind. They're looking for someone with a particular skill set and has the expertise, someone who can check in with them, make sure that they're reaching their financial goals, is really incredible. I mean, I'm in the dark with a lot of this stuff. I don't know exactly what financial planning even is. So I think that the way you lay it out is very clear and sounds really beneficial for anybody who's interested in alternative investing and might not know even what that is, and really need someone to kind of help them understand that they have the tools to do it. How are they equipped to execute these goals? So do you work with anyone who invests with self-directed IRAs? And, what does that look like? How is it different for any of your clients?
Well, we have several hundred clients who are invested in self-directed IRAs. We we have over the years created our own funds, and those funds, if they are retirement accounts, are invested at CamaPlan in self-directed IRAs, which enables the client to invest in private placements, which are our funds, within their IRA.
That is extremely interesting information. It sounds like, you mentioned that you've got a ton of different clients that you're working with. You work with high net worth clients, you work with clients who are investing with self-directed IRAs, and then you've got people who are small business owners. They own mom and pop shops. You've seen and encounter a ton of different people then over the course of your years as a financial advisor. So, without giving too much away about anyone's identity or anything like that, what are some of the common characteristics that you've noticed in investors that make them, successful? And what are some of the common obstacles, if any, that you've seen investors encounter? I mean, this can go even back to your time at American Express, including your time at AG Morgan. What are the obstacles? What are the successful traits?
I would say that the most important rule for success for clients is that they consistently save throughout their working years for retirement. If they do that their whole career, and they get at least an average rate of return, they will end up being able to retire at a reasonable age and be financially independent. And the clients that I've observed that have trouble are the ones that can never save. If they save, they have to take the money out. There's always an emergency. They're just not disciplined in saving for the long term. So it's really the consistency of saving that I've observed is really the key for clients to have a great retirement.
Absolutely. I think you raised two excellent points, the point of consistency and the point of then discipline. Having those two in tandem is probably so important. Being able to take an introspective look at yourself and decide, all right, I'm going to check myself right now. How has my behavior been? How have my financial choices been? How have I been deciding on these things? Being able to identify, if you're someone who needs to discipline yourself with your choices. I know early pandemic, I had some online shopping impulse control problems, but that's a different problem.
Right.
But like the bigger things, like buying a house or being able to save up for your kids' college, being able to execute self-discipline. If you have characteristics that might prevent you from being able to do those things, if you're inconsistent or erratic in your behavior toward money, being able to take stock of yourself is probably so important. I think it's important to, I think you raise a very interesting point in terms of discipline and consistency. So thank you for sharing those.
Sure.
So then if you look back, Vinny, if there any early endeavors in terms of any stories or major life lessons, anecdotes, anything that when you think back on at the beginning of your career or in the past, any big mistakes that you may have made or life lessons that you learned, how were you able to take those lessons and those mistakes and move forward?
So when I first started as an advisor, I would make recommendations to clients. And like, for example, okay, guys, we need to get a will. And 3 months later, we'd meet for our quarterly review, and they didn't get their will done.
Mm-hmm.
And then I'd say, guys, you have to get a will. And then 3 months later, I'd meet with them, and they never got their will. And so what I learned fairly quickly in the business is that you really have to lead the horse to water. So I became much more proactive, and I would say, okay, so what we're going to do is we're going to schedule an appointment. There's an attorney that I use that I've been using for a while. He will help you get your will done. And I kind of was just a little bit more assertive about getting things done.
Right.
Oh, okay, guys, we need to refinance your house. You'll save $500 a month if we do the refinance. And I would actually connect them with the mortgage broker. And so I realized in the very beginning, not just give the advice, but also help them along. And I've been doing it that way ever since.
Right. That's incredible. I mean, it always starts with you. I think being able to take a look at yourself and implement that discipline in yourself. I mean, I think I'm the same way. I need to start being more proactive and assertive and helping others along the way if I need to get something done. being able to take a look at yourself and decide, all right, here's where I need help is an interesting approach, especially in the beginning when you're new and you're starting out and kind of using that as a way to start being a leader and a partner and an investor. I think being able to help folks implement discipline in themselves is a really incredible approach, an interesting approach. I'm curious too, are there any, in terms of, you're a financial advisor, so there are obviously due diligence factors that go into each of the investments that all of your clients and investors are involved in. So are there any due diligence factors that you say that clients should consider? And, on the flip side, what are some of the major pitfalls that you think investors should also look out for or avoid?
Well, I would say it's just matching the risk tolerance that a person has with the investment. So generally people will only see the return. Oh, wow, that return is fantastic. Let's invest in that. But we have to make sure that the investment that they select or the investment strategy they select matches with their risk tolerance. So we use a risk tolerance questionnaire to help figure out what kind of risk a family is comfortable with. And then we match that risk tolerance to the investment strategy so that people are comfortable with their investments. They could have a wonderful strategy, but if they can't sleep at night, then it does them no good at all.
Right.
So we spend a lot of time making sure that we match the risk tolerance with the investment strategy, which of course then in turn will make sure that they reach their financial goals.
That's extremely interesting. I love the idea of a risk questionnaire. I think people can then, you talk about individuality a lot. People can learn right then and there, this is my risk tolerance. This is the level I'm at. This is the kind of service I need. And then you as the advisor can really cater yourself to what those people need. I mean, I look at myself, I'm a pretty risk adverse person when it comes to investing, when it comes to kind of doing anything, to be honest. So I think a lot of people like me probably make a lot of decisions without assessing that risk tolerance. So it's super important.
Well said.
Thank you. So for you then, how did all this end up informing your investment strategy? Is there anything in terms of, I know you mentioned the story of the will. Is there anything else that kind of came up for you that helped you inform your investment strategy or even your advisory strategy as well?
Well, so what we did was we've created 5 different levels of risk: conservative, moderately moderate, moderately aggressive, and then aggressive. So we have 5 different risk strategies. And then, as I said, we do the risk questionnaire, and then we review the strategies with our clients and the risks and returns of those each of those 5 different portfolios, so that we can hopefully get it right the first time and make sure we picked a strategy that will reach their goals, but also be something that's within their risk tolerance and they'll be comfortable with.
That's an extremely interesting approach. So then does every client that comes to AG Morgan start out with this risk assessment and everybody fits into each of the categories, or depending on a person's individual situation, do you kind of have to mix things up, improvise, or do you find that most people can pretty easily be categorized?
No, well, 2 things. So many times we mix and match, but also most clients will have more than one goal. And so they might be aggressive with one goal, but they might be conservative with another. So,
interesting.
I want to buy a house in 3 years. Well, that's a conservative strategy. Well, I want to retire in 30 years. That's a more growth-oriented strategy. So the same person can have different strategies within their entire portfolio based on the goal, the length of the goal, and other factors.
Yeah, wow. Okay, so I wasn't thinking of it that way, to be honest. The idea that in some areas of people's lives, they could be a bit more aggressive or more ambitious, and in other areas, they can be less so, more conservative. that's a really interesting way for a lot of people, because nobody's the same. A lot of people who are listening to this are probably newer investors, younger investors, someone who might just be starting out and trying to understand what their own risk tolerance is before they get started. Being able to take a look at, this is where I'm more conservative, this is where I'm more aggressive, this is where I'm more excited about risk, this is where I'm a bit more nervous. Taking stock of yourself, it's extremely interesting. So I'm really glad that you bring that up. It got me starting to think myself too, and thinking about the way my financial universe works. Where am I more ambitious? Where am I more willing to spend money? Where am I less willing to think about spending money or putting tons of money into? Thank you for sharing that. Yeah. So I'm curious. I mean, this is a year where we've all kind of been inside for a while. Some of us are just starting to go back to offices, things like that. In terms of, there's so much information out there, podcasts, television, books, all of these different things. Is there anything that you use tools-wise or resources-wise, anything you use to keep up with your knowledge of investing or financial advisory? Is there a specific website you find yourself always going back to, or is there a publication? You're always interested in continuing your education. You said that in the beginning. So is there a book that you've, gone back and read that you started out with, or even one that you're reading right now for leisure that you've been surprised to find, hey, this can actually service my clients? I'm curious if there's anything that, you refer to in your personal toolbox.
Yes. So first, we do have several tools that we use. We like MarketSmith and Investors Business Daily. Their research is fantastic, and we like their approach. We also use Morningstar to compare investments. That does a great job of helping us filter through all the thousands of investments that are available. When it comes to knowledge, it's very simple. I just read. Basically, there are about a dozen of the top investment managers in the world, and any books that they write, any articles, I just read everything that they have to say about the markets and about their investment style and their investment strategy. And so I just continue to read. And, the more I read, the more I learn, and hopefully the better I do of a job with helping my clients with their investment strategies.
Absolutely. I'm also interested in thanks for sharing that also as well. I think that'll be helpful for a lot of people to start to take a look at their own resources and start to figure out where in their world of information they can start to get and gain new information for themselves as well. I'm interested too in just thinking back to, your own strategies and your clients, and talking about one thing that's come up a lot for the two of us in this conversation has been the idea of individuality and personal attention that you provide to your clients, things like that. Is there anything in terms of, even for yourself, looking at partners or people that you've decided to work with, or clients that you are willing to take on? What do you think are some of the key strengths or weaknesses that you see in investors? I think mainly focusing on strengths here. What do you think are, setting aside from the consistency and the discipline that folks have, are there any other strengths that you see in a lot of investors who may be more on the aggressive side and do take risks, and what aids their success?
Well, the most successful investors in the last 50 years all follow the investment strategy or the investment philosophy of Warren Buffett, which is value investing. So they're always looking at trying to buy investments that are below their their market values, and take advantages of the dips, so to speak. And so we can invest in growth, but we can also invest in value, and we do invest in both philosophies. But it depends on the timing. It depends on how the market's doing, what we think the market's going to be doing going forward. But I would say for people that don't have a lot of knowledge in investing, and this is advice that has been given by Warren Buffett a million times, is, if you just don't have that expertise, it's very simple. Just buy the S&P 500. So a person can buy a mutual fund that invests in the 500 largest companies in the world. So it's very well diversified. And the S&P 500 over the years has consistently gotten an excellent rate of return. So if a person can invest the time in finding investments that could potentially outperform the market, a very simple solution is just buy the S&P.
Awesome. Well, thank you for sharing that. I think that also raises a ton of new ideas for myself as well, just thinking about in terms of the factors that go into being, you hear the common phrase being in the right place, right time, but there are factors that folks should consider when forming their own strategies, their financial strategies, like things you brought up time. I thought that was really resonant, especially in the fact that, people who want to get involved in investing might not have a lot of time. They might still be working 9-to-5 jobs and aren't passively gaining passive income as their full-time work. But I think that time is a really interesting factor to consider, as well as value you brought up as well. So I think that being able to consider those factors and where they play into someone's investment strategy is super invaluable. So thank you for sharing that as well.
Sure.
That's great. So I'm curious too. I had another question that came up just from your response, but I lost it. So I'm gonna start with one of these other questions that I do have here as well for you, Vinny. While I think of it again, how do you like to, give back to the community, investment or otherwise? Obviously, inherently in your service and the way that you provide it, there is a way you're giving back to your community. You are providing them with their individual, most personal ability to successfully achieve their financial goals. So is there any other way that you like to give back or, even to the larger community outside of your investment community?
Well, so two things. So we don't have a rule about minimum investment for clients that come in. So, if a person has $25,000 to invest, we'll still take them on because we want to help. Obviously, a $25,000 account is not a very profitable account,
right?
But it gives us the opportunity to help people get started. So we have no minimums. We're willing to take anybody that wants help. If they want help, we'll give them help. And then outside of financial planning, I coached baseball for 15 years and spent thousands of hours coaching young kids and just absolutely loved it. So I've done that as well.
That's awesome. I think I would have liked to have had you as my my baseball coach, but as you can imagine, with a theater and English background, I was usually last picked for baseball. So I don't think you would have liked having me on your team. But that sounds great. I mean, I think being able to coach outside of financial advisory, where you're in a position where you are in a way coaching your clients and helping guide them without, giving them the full exact A through Y, like how they're going to get to point Z, if that makes any sense. But I think that that's really interesting that you have experience outside of a different world of coaching, but you're also still coaching as well. So I think that's cool. Have you found any interesting overlaps in the two of them? Like when you were coaching baseball, you're like, oh, this is a good way I should approach how I coach clients or advise clients, I should say.
Yeah. I mean, I just think it's the same thing. Just, I teach my clients how to solve a problem. And the same thing with the kids. I would teach them how to hit a baseball or field a ground ball or throw a curveball, whatever it is. It's really the same. I always felt it was the same.
Right. So providing people, whether it's children in baseball and learning how to throw a ground ball versus here's how you're going to get that house in 3 years. It's kind of giving them the tools to be able to achieve that goal or to make that ground ball happen or to successfully throw the ball. I think and I'm really showing the theater major by being like, yeah, throw the ball. but I think that that's extremely interesting. Thank you for sharing that. I did remember my other question too, and I wrote it down. In terms of, goal setting and the way that you establish, and I think you've touched on a lot of this throughout the conversation too, but in asking, what are some characteristics that you've seen in successful investors, thinking about the audience and the fact that, people listening might be brand new to this world, are there any other factors that should be considered for folks when they're first starting out in this industry, other than these are the goals and these are what I want to set in terms of, I know you brought up time and value and things like that. Are there any other factors that folks should potentially consider when starting to develop their financial goals?
Well, so they need to have realistic expectations for what goals they could accomplish.
Mm-hmm.
And so what happens over time with people is they progress in their careers, their salaries hopefully continue to go up, and so they can change their goals as they go along or add goals, as they start to have a family, 1, 2, 3 kids,
mm-hmm.
then they may want to start saving for those kids' college educations, or people's income continues to rise. Now all of a sudden maybe they are considering a second home. So those things will evolve over time. And so our job would be to be there to be able to guide them as their life's circumstances change.
Yeah, I really like the taking into consideration that you can't have everything completely planned out at square one. You can't really fully account for how many kids you'll have, who you'll marry, when you'll marry, when those kids will go to college. So being able to, as you said, at AG Morgan, you guys do an annual check-in or and regularly check in with your clients, being able to take a look at your goals and have the flexibility to reorient them and understand that things could change is such a I think a small thing that I think a lot of people take for granted, is accepting the fact that things can in fact change and you might not have all the answers to start out with. And that's where, folks like you guys come in handy as well.
Right.
Absolutely. So this is one of the questions we ask all of our guests, Vinny. I'm interested to hear your response. This does not have to be necessarily a financial answer. So this can be however you personally perceive this question. But what would you say are your keys to building wealth and unlocking financial freedom? So like I said, this does not have to be financial, but, given your past experiences and given, things you've learned over the years, what are the things that have informed the ways that you specifically, Vincent Camarda, look at success?
For clients or for myself?
It could be for clients, it could be for yourself. It's kind of, I think most people have answered it about themselves, but you could certainly throw me the curveball, see, baseball term.
No. So for me, I just do the same things that I've always advised my clients to do, which is consistently save. We save on a monthly basis, and we'll continue to do that for as long as I continue to work. And so my goals have changed somewhat over time. Now that my kids are adults, they're participating in business with me. So now we're coming to a point where we will start giving my kids more and more responsibility. And over maybe the next 10 or 15 years, I would start to take more of a secondary role as they continue to grow and become more and more comfortable in the business.
That's awesome. So being able to instill your children as well with the same ideas and the same philosophies and, however they've taken them and made them different for themselves too, because everybody's different, and being able to implement them in successful business practice is really incredible. I think that that's a great way to give people a glimpse into what you are hoping your future is going to be. So I think that that's a great response.
Thanks.
You're welcome. And thank you again, so much for sharing all this information with us, Vinny. I think your knowledge and your background, all that personal experience combined, have really made for some excellent, insightful thoughts this week on this episode. The last question we ask before we go is, if anyone listening would like to reach you, how can people do that? Do you have any websites or social media? I know you jokingly talked about tech before, but is there any way that listeners can get in touch with you?
Yes, believe it or not, we actually have a website, and it's AG Morgan. It's AG Morgan Financial Advisors, LLC.
Great, thank you. And so that's the best way for everybody to reach Vincent if anybody is curious. So everyone, be on the lookout for upcoming CamaPlan events featuring Vincent J. Camarda and AG Morgan. But until then, everyone, thank you for joining us this week again on the road to financial freedom. Be sure to tune in next week to hear more from our experts who have paved their roads to financial freedom, or call CamaPlan today to learn more about how you can start to take control of your future wealth. Thanks again, Vinny, and thank you, everyone. Thank you all for tuning into our podcast. We truly hope that you're enjoying your ride along the road to financial freedom so far. If you like what you've heard and learned, or if you want to hear more about certain topics that we may have already covered or have yet to cover, please subscribe, rate, and leave us a review. We would love to hear any feedback from you so that we may continue to make our podcast the best that it can be for you, our listeners. Thanks again, everyone, and remember, tune in next week to the road to financial freedom.